You get your paycheck this month, the government takes a slice before you even see it. Then you spend what's left on rent, food, maybe a treat, and somewhere across town, a man worth $150 billion is paying less tax than you. Not because he cheated, not because he has a better accountant, because the rules were written for him, and nobody told you. First, let's talk about the most important financial concept nobody teaches in school. There are two kinds of money: money you earn and money you own. When you earn money, salary, wages, freelance work, the government sees it the moment it moves. They take their cut immediately. You have no choice. It's called income tax, and for most people, it's between 20% and 40%. But when you own something, a company, stocks, property, that thing can grow in value by $1 billion, and the government gets absolutely nothing. Why? Because you haven't sold it yet. You haven't earned anything. On paper, you're just sitting there holding an asset. This is the billionaire's entire strategy in one sentence. Get rich through ownership, not income. Bezos doesn't take a $10 billion salary from Amazon. He takes $81,500 a year. That's less than a mid-level manager in Seattle. His actual wealth comes from Amazon stock, which grew by $75 billion in a single year. And he paid zero tax on that $75 billion. Zero. But here's the problem with never selling. If you never sell, you never have cash. You're worth $150 billion on paper, but you can't buy lunch. That's not a great lifestyle. So what do? You borrow. You walk into a bank and say, I have $10 billion in stock, give me $500 million in cash. The bank says yes immediately. You're their favorite customer, and here's the beautiful, infuriating part. A loan is not income. The government doesn't touch it. You just received $500 million and your tax bill is zero. You use that cash to live. Private jets, mansions, whatever. And the loan interest? Maybe 2 to 3% a year. Meanwhile, your stock is growing at 10 to 15%. You're literally profiting while in debt. This strategy even has a name: buy, borrow, die. Which brings us to the dying part. When a billionaire dies, something extraordinary happens. Let's say they bought Amazon stock in 1997 for $1 million. By the time they die, it's worth $50 billion. Normally, selling that would trigger a massive tax bill on the $49.999 billion gain. But they didn't sell, they died holding it. Their children inherit the stock, and when they do, the original purchase price legally resets to whatever it's worth on the day of inheritance. The $49.999 billion gain simply disappears, vanishes, never taxed, not once, not ever. The family then borrows against the stock just like their parent did, and the cycle continues forever. 3 words, 1 strategy: zero tax across generations. But wait, what about when they give to charity? Ah yes, the philanthropy chapter. Billionaire donates $3 billion to their own foundation, gets a $3 billion tax deduction, reducing the tax they owe on any income that year. The foundation invests the money, grows it tax-free, and the billionaire sits on the board deciding where it all goes. It's charity. Technically, their kids get paid director salaries from it, their conferences get funded by it, their pet projects get backed by it, and the whole thing compounds untaxed forever. One newspaper called it doing good while doing very well. That's one way to put it. Now you might be wondering, why doesn't the government just fix this? Great question. In 2021, a wealth tax was proposed in the US. It would have added a small tax on assets over $1 billion. Nothing crazy. Within 48 hours, over 150 lobbyists appeared in Washington to fight it. The bill died quietly. The same year, the IRS audit rate for people earning under $25,000 was actually higher than for people earning over $500,000. Not because poor people cheat more, because auditing poor people is cheaper and easier. The IRS runs on a budget. They go after the low-hanging fruit. The system isn't broken. It's working exactly as designed. Here's what the ProPublica investigation found in 2021. They obtained the actual tax records of America's 25 wealthiest people. Between 2014 and 2018, their collective wealth grew by $401 billion. They paid $13.6 billion in federal income tax. That's a true tax rate of 3.4%. You likely paid more. So the next time someone tells you the rich pay their fair share, ask them this. Fair share of what exactly? Income they don't take? Gains they never realize? Wealth that resets when they die? The game isn't rigged against you because you're not trying hard enough. It's rigged against you because you're playing by one set of rules, and they wrote the other set themselves.